Hello everyone, good morning and welcome to Kalasalingam Academy of Research and Education. I am Dr. Ashok Kumar Sahu, working as an assistant professor in the Department of Commerce. In this session, I am going to discuss you with one of the most important topic of financial accounting subject, that is memorandum trading account. So before we discuss about this topic, first we need to know the outline of this session. So this session gives information about various concepts in the preparation of memorandum trading account. It also gives an idea about the various important terms that are generally used while preparing memorandum trading account. It also gives idea about some important terms that are generally used in the preparation of memorandum trading account, like salvage stock value, next insured stock charges, and so on, indemnity period, fixed indemnity period, and so on. If we talk about other objectives, like it also explains about the various pro forma and formulas for the preparation of memorandum trading account. So the question is, what is memorandum trading account? So generally it is a special type of account, and this account is generally required to find out the estimated stock value. So as to calculate the estimated stock value, we are generally preparing memorandum trading account. Suppose in your business, if you face any loss, then and if you insured some amount for loss, then you can how you can claim to insurance company, and what are the pro forma that we need to know for the preparation of memorandum trading account, that are explained in the later slide. So for the preparation of this account, we need to consider some of the important term, that is gross profit ratio. We need to calculate the gross profit ratio of the previous year or last year. Next, we need to calculate we need to consider the opening stock, purchase, sale, and direct expenses, because we need to prepare one trading account. After that, we are able to calculate the memorandum trading account. So there are while preparing a memorandum trading account, there are so many terms that are generally used while preparing this account. The first one is indemnity period. So the period of indemnity is the length of time that the insurance company is generally obligated to make payments to cover the losses ensued under the policy is called indemnity period. Whatever the time given by your insurance company to pay some assured to you, that is called indemnity period. Another one is salvage. Salvage is also known as salvage stock value. Here, the value of stock saved from the fire accident is called salvage stock value. This salvage stock value is also referred as scrap value or realized value of stock. Another terms also there, that is average clause. So this clause means that if the insurer means your insurance company where you make insurance, if the insurer discovers that the sum insured on your policy is less than the actual value of your contents or the rebuild cost of your property, then they can reduce their payout to you when you claim. So how generally average clause will be calculated? There are three important terms for the calculation of average clause. First one is actual loss occurred in your business. Second one is insured amount or insured policy amount, and the third one is value of goods or property at the date of loss. So how the formula is actual loss into insured amount divided by value of goods or property at the date of loss. In the next video we will discuss the practical problem relating to this average clause and so on. The next important terms that are generally used in the insurance, that is short sale. So it means loss of sale due to the incident of fire and subsequent dislocation of the business. Generally, short sale can be calculated by making differences between the standard turnover minus actual turnover during the period of indemnity is called short sale. Here short sale formula is equal to standard turnover minus actual turnover. Next important term that are generally used in insurance, that is insured standing charges. It means those charges which will continue to be incurred by you irrespective of the occurrence of the damage, and such charges have no impact on turnover. Suppose your business faced any loss, after that also your business have to pay some have to bear some operational cost, like you need to pay the salary of your employees, next you need to pay the rent and taxes if any, next you have to pay some interest. So these are the standing charges that might occur due to that might generally occur or incurred due to decrease in turnover or due to loss of a business by an insured peril. So these are the various important terms that are generally used in memorandum trading account. Here first we need to know the various steps for the preparation of memorandum trading account. So generally there are 5 steps for the preparation of memorandum trading account. First we need to calculate the gross profit by considering the available previous data. Generally for every programs we need to we need to prepare working notes. So first we need to calculate the gross profit, that is very important, of previous data, and the second one is you need to calculate the average rate of gross profit by considering your previous year gross profit. The third one is you need to calculate the closing stock on the date of fire, and the fourth step we need to calculate the net loss of stock, and the last one we need to calculate the claim that is to be lodged. So here is the pro forma of preparation of the trading account. So in the debit side, that is to opening stock, next to purchase, and in purchase we are deducting purchase returns, next to some to carriage inwards, to wages or any other direct expenses if any. On the other hand, in the credit side, buy sales, and if there is any sales return then we need to deduct from sales, then buy closing stock, and if any stock is still not yet written off, then we need to add from closing stock. Next, how you calculate the gross profit rate or gross profit ratio. So generally rate of gross profit is equal to gross profit divided by net sales into 100. The next step, we need to prepare another memorandum trading account from the beginning of the year till the fire accident happened. So this is also similar to the previous one. Here you need to prepare the trading account. In the debit side, to opening stock, next to purchase, and you need to deduct purchase return if any. You need to deduct some drawings if any. If some these items, these terms are there, then you need to deduct from purchase. Next, you need to consider some direct expenses like carriage inward, wages, manufacturing expenses like manufacturing expense means factory expenses, and some factory lighting, factory fuel, factory waters, and any other direct expenses you need to consider in the debit side of trading account. And in the credit side, buy sales, and in this sales you need to deduct some sales return, or if any on recorded sales or sales not dispatched, that you need to deduct from sales. Next, you need to add closing stock. Next, each gross loss. If gross profit is then you need to prepare, you need to add in then in the debit side, that is to gross profit, and if it is loss, then you need to add by gross loss in the credit side of this trading account. So in the next step, you need to calculate the amount of lost stock. So this is a pro forma. The first is stock on the date of fire. Next, you have to deduct the salvage goods. Then you have to add some expenses if any that is incurred for extinguishing of fire or for accident. Then after, you will get net loss of stock. So this is a pro forma you need to remember. Next step, you need to calculate the claim to be lodged. So claim amount, how you can calculate? By using this formula, that is net loss of stock into policy value divided by value of stock on the date of fire. So further I am saying, first you need to prepare the trading account of the previous data. Next, you need to calculate the gross profit rate by using this formula. Then third step, you need to prepare another memorandum trading account from the beginning of the year till the fire accident happens. Further, you need to prepare trading account of the loss year data. And next, you need to calculate the actual amount of loss of stock by using this pro forma. And the last one is, you need to apply the following formula. So these are the various formula that you need to know while preparing memorandum trading account. In the next video, we will discuss the practical problem of memorandum trading account. Thank you so much.